Hey guys, welcome back to the channel McNallie Money, the official home of power mining analysis. In today's episode, Anthony Power and I are joined by Salman Khan. He's the CFO of MARA Holdings. They just came out with their Q2 earnings or results, and we're going to be talking through them in today's video. Before we get into it, take a second, hit the like button, you guys. Big help to myself and the channel. If you're not already subscribed, McNallie Money, feel free to join. And let us know in the comment section below what you thought about MARA's Q2 results and if you're currently holding shares. With that being said, let's get into today's interview. Okay guys, so that's right. Today's video, a very special guest, the CFO of MARA Holdings, Salman Khan, to talk about Q2 results that just came out this week. Now, this is the first miner out of the gate. We've got a lot of questions in terms of the upcoming earnings season. Really looking forward to this one, and thanks so much for making the time today, Salman.
Thank you very much. I'm really happy to be here, and what an amazing earnings for MARA this time, and what a perfect timing to be on your show. Thank you.
Yeah, we did an episode on it yesterday, actually, and the numbers looked good. We'll get into that in a second, but before we do, I wanted to get a quick introduction on yourself and how you ended up at MARA, as this is your first time on the channel.
It's been a long journey. I can say that over 2 decades in oil and gas industry, renewable energy, and doing multiple different things worldwide, not only here in the US, but also advising national oil companies in the Middle East. And as this opportunity at MARA popped up, it was very interesting because I was familiar with Bitcoin and cryptocurrencies in general. But looking at under the hood, really understanding how the business operates from a data center perspective was very intriguing, and a lot of interest peaked in for me because a lot of commonalities around commodity price, the uniqueness of Bitcoin and cryptocurrencies in general. And then looking at the power. Power is a unique commonality in all these industries, and utilizing that power for the best possible use and use case is important. And being in a capital intensive industry where you have stockholders who are expecting a commodity that will create value from a long-term perspective, where you have revenues that are tied to a commodity that you don't control the price of that commodity, but what you can control is how you deploy that capital efficiently and how you squeeze the most out of your operations from an operating cost perspective. All those things were very common language for me coming from oil industry and renewable energy industry. So all, in summary, I felt at home coming to MARA.
That's great. I'm up in Calgary, Alberta, so oil country here as well. And it's interesting to hear the parallels between these industries. Now, this is great timing, as you say. Earnings obviously came out this week. To have the CFO on is a real treat. So what were some of the highlights from your Q2 numbers?
Well, it was a record quarter for us. We broke many barriers this quarter. We had the highest revenue quarter. We had the highest production. We also grew significantly year over year. Our holdings of Bitcoin were at a record high, more than 360% increase in the value of Bitcoin that we held a year ago this time around versus now. So a proud moment. As you know, this is a growth industry, and MARA has been at the forefront of that amongst the industry participants. Our industry is brand new when it comes to comparison to other industries. We have players who were barely established a year, 2 years, 3 years ago. And there's a lot of learnings that are happening across the board. There are people who are pivoting towards AI HPC as a diversification of revenues. We have stayed put on Bitcoin mining, as you know, with a different flavor of AI and HPC, which we addressed this quarter, which is the exciting part. We also hit the highest exahash, which is 57 plus exahash in the sector, and not only that, but also we touched more than 50,000 coins post quarter end, which was a milestone for us. Again, a reminder: we happen to have the second largest holding of Bitcoin public company-wise, but we are not a treasury company. We distinguish ourselves from MicroStrategy and other treasury companies, which is encouraging to see so many treasury companies now coming into play. But our strategy really, we are an operating business, which happens to have a large stack of Bitcoin on our balance sheet, which we not only hold from a long-term capital appreciation standpoint, but also we want to create a yield on it and a cash flow that helps pay for our operating expenses. And that's a key distinguishing factor between us and other treasury companies.
Yeah, that's great to hear, Simon. And to be honest with you, I mean, I've been in this space now for over 5 years, and I've looked at the earnings updates from a lot of mining companies, and it's been challenging over the last few years. Even though we've seen that Bitcoin price rally from the days when it was just over 15,000 at the end of 2022, and all the way up now as we see it today at 118,000. And so, the miners are starting to benefit. But even if you went back to the last quarter, it was a challenge for a lot of miners because most of them just weren't mining profitably, effectively, and then with the advent of FASB rules being in play, those that had a HODL in the last quarter were severely impacted on the revaluation of their Bitcoin reserve. We're seeing the opposite of that in this cycle. You're the first big company to announce your earnings. You're the biggest mining company out there in so many metrics at the moment, including obviously in production, including market capitalization. So you tick all those boxes. Adjusted EBITDA of 1.2 billion. However, obviously the revaluation of the Bitcoin is probably most of that figure there, and when you come out with a net income of 808 million, and some of the subscribers will be scratching and saying, well, if the revenue's only 238 million, how do we get to 808 million in profit? So it's that understanding about this treatment of Bitcoin valuation. I mean, you've just mentioned you're not a treasury management company, which is obviously good to hear from the MARA shareholders, because we've seen a lot of people in the space focus on them sort of companies at the moment, and you guys have got the second largest HODL out there behind Strategy. And you've bought Bitcoin in the last 12 months. You've built that Bitcoin HODL up there. But do you see this impact of the FASB rule being a hindrance, or is it a benefit to the company? How do you see that? And then how do you look at the skeptics that say, well, if you took the FASB valuation away, you physically made a loss, and not a loss, but a significant loss of it. How would you sort of like answer that the critics back for them sort of comments?
Yeah, look, it's as we started talking about this a few moments ago, this is a growth sector. This is a newer sector. This is really scratching the surface when it comes to the startup mode, if you like. We happen to be large publicly traded companies from a market cap perspective, but really these are startups. And there's a lot of growth investment happening in this sector. The investor base, when you look at that, the investors expect the company to invest and grow the exahash and capacity over time, because the expectation is that if we can produce, the more share that we have of the network, the more Bitcoin that we can produce and hold on our balance sheet over a period of time, there will be a huge payout for the investors. That's the expectation I'm paraphrasing what I hear when I talk to investors. Given that backdrop, there's a different class of asset or different class of investors who would like to invest in a growth mode versus people who would like to invest in mature companies that are churning free cash flows and can fund their own operations, and they're highly profitable companies. So there are different metrics for different organizations. Having lived in different sectors and industries, there are different flavors to that, right? So when it comes to Bitcoin mining in particular, even AI HPC, when you think about it, it's highly capital intensive. And that capital, the current cash flows and profits cannot cover that capital. I'm not aware of any Bitcoin miner today who can live within their own means and fund their capital through their cash flow generated from operations, even if they sell all their Bitcoin. Primarily because if you're growing, you have maintenance capital over a period of time. And the expectation is that over a period of time, you will get to that point where your cash flows are sufficient to meet the growth expectation of the industry. But until we get there, I want to point out some statistics and data before people start getting scared. Hey, what is Salman talking about? When you look at Amazon, when you look at Google, when you look at Tesla, some very successful large cash cows today, when they were in startup mode or growth mode, they did not have free cash flows. They did not have profitability for a number of years. Well, some had longer than others, like Tesla took 2 decades, and Google was much quicker. So they were better than the others in some cases. But the thesis here is if you have investors who are looking to invest in a growth industry, you have to view it from a different angle and a different lens. And addressing the FASB, look, I personally like the FASB rules because it puts expectations and defines the rules a little bit better instead of operating in a jungle, no man's land, I guess, where it used to be previously. Now at least we have a fair market value mechanism, and whether we like it or not, it does provide it does create a little bit of uncertainty around earnings because the unrealized gain or loss could be huge. I mean, if Bitcoin price goes down on a quarter end significantly compared to previous quarter end, you would expect to see a huge loss. Now, the good news is that we don't realize that gain or loss until we sell Bitcoin. And we haven't been selling Bitcoin lately. So the question arises, hey, that gain or loss that appears on the P&L, it's a good indication for our investors to see if MARA had sold that Bitcoin today or as of that date, then we would have recognized this revenue or this gain or loss in the case of a loss situation. But the good news is that we are not selling that Bitcoin, and we want to see a lot more appreciation on the valuation and over a period of time. As Bitcoin price goes up, we would expect more gains to be recognized over a period of time. So that's the thesis. I like the framework. We like that it provides the users of the financial statements and our investors a framework to compare us versus other miners who have lower HODL position or a higher HODL position. And there are some miners who are selling all their Bitcoin, right? So as a matter of policy, now investors can compare us versus others and see what value this HODL creates for us.
Yeah. No, that's a good response, and it's good to let those sort of retail investors understand really it's more than just a black and white situation. And we had the same discussion on our podcast earlier today, Salman, and we were saying if they decided to sell that Bitcoin today, you're going to attract, the best part of $66 billion in revenues. That's what's sitting there on the balance sheet. So I believe so. And if we'd have stayed with the old rules, I mean, we'd have still been valuing Bitcoin at, I don't know, in the low thousands. So it's, you weren't able to increase the value. You can only decrease the value. So I suppose it would have gone all the way back down to 15,000, where it was back in the end of 2022. Just as as an aside as well, it's great to see that, you have liquidity on the balance sheet there. You've obviously you've highlighted, and it's true from your operational updates, you haven't been selling any Bitcoin for quite some time now. So obviously you're using other levers to raise sufficient funds for the operational and obviously for the capital requirements for this growth in the company. Do you consider, continuing to use those levers going forward and to keep that balance of Bitcoin growing from 50,000 upwards? Or do you feel there's a point in time actually when you will consider selling some Bitcoin to cover some of those costs and then maybe not relying on as much as any further dilution, like a few of the other miners have started to indicate themselves?
Look, it's a question that we ask ourselves every month. We have an investment committee. We assemble and we look into multiple macro situations. We have a pretty complex financial model where we look at multiple opportunities, whether we monetize Bitcoin or should we continue to raise capital the way we are raising today. And just a quick reminder, we were selling Bitcoin just a year and a half ago. to pay for our operating expenses. So we have gone multiple ways depending on macroeconomic conditions. And last year it made a lot of sense. FASB rules, ETFs, record launches of ETFs. Then you had the Trump effect, the politics change in the Washington. All those things made a lot of sense for us to go in a full HODL position. And when we do the math, if I haven't looked at it today, but I would expect somewhere, mid double digit type rate of returns, IRRs, with the capital raises that we did with 0% coupon converts that we did late last year in a matter of few months. And that kind of rate of returns, it's hard to get those kind of returns by investing in mining business, and especially with the hash price where it has gone versus what it used to be. But having said that, that model keeps evolving with time. As Bitcoin price appreciates, as the global hash rate normalizes a bit, the things will change, and it's a dynamic decision. And I can't say that we have a religious belief that we will never sell Bitcoin. We are fiduciaries. Our stockholders have given us responsibility to make the right decisions. And those decisions change based on market conditions. And those market conditions dictated that we go on a full HODL position last year, and we have benefited. Our stockholders have benefited tremendously from that upside, and we'll continue to reevaluate it as we move forward from here.
Great. Hey, Salman, one directly from the audience or subscribers here, and you kind of made reference to this, I guess, earlier when you talked about the fact that MARA does not want to be viewed as a treasury company. But what would you say are some of the misconceptions that you see on X or social media about MARA or your operations right now?
Look, a few things that MARA has had the privilege of having amazing following from our retail share base. And I'm so proud and appreciative of the people who have believed in us and appreciate their trust in us. And over this period of time, multiple players have evolved over a period of time. There has been more opportunities to invest in multiple places. And then institutions have taken positions. So there's a diversity of stockholder base that we have now. But our retail base remains our core that has recognized MARA over the years and has continued to believe in our strategy. When it comes to the feedback that we get, we hear feedback a lot. We get feedback from people. The challenge in a growing industry is that we are making decisions from a long-term perspective. Sometimes those long-term decisions may not show results in a matter of seconds. And that's the part that sometimes could be viewed as a disconnect between investors who are looking to day trade or put a trade on a daily basis and earn quick bucks versus our fiduciary responsibility from a long-term shareholder value driver perspective. So that to me is always a challenge for a growth stock, whether you look at this sector or other sectors. There will always be that disconnect with the retail. But all in all, the satisfaction is that from a long-term perspective, as our strategies become realities, and you start to see revenues flowing through the P&L for the diversification of revenues that we've talked about historically over time, you will expect that the stock price will benefit from that, and stockholders across the board will benefit from it.
It's about just over 4 years ago, Salman, since I met my first CEO live in the space. And that was actually Fred at the London AIM Summit. And to be honest with you, me and Fred were in a room with a lot of people in suits, and nobody pretty much knew either of us. So we managed to get together and we had a chat for about, I don't know, 45 minutes. And he talked, because I couldn't really grasp the asset light strategy that you were using at the time. I mean, on paper, it sounds the best way forward. From my sense as an accountant as well, it was like, where's the control? And so it's great to see on your latest update now that I think that you're sort of 70% in terms of own sites. Can you sort of give us an indication of where you expect that number to say grow in the next, 6, 12, 18 months? Are you looking to get that closer to 100%? And also, do you see, I mean, you're the largest player in the space, and when anything's large, they tend to be able to sort of like achieve them economies of scale. I mean, your energy price for your own sites has come really down, and that's great to see because that was another area of concern from a lot of analysts in the space, that your energy prices appeared at one time to be significantly higher than some of your peer group. That seems to have come down, reflected in your results as well. But the hosting there, you've still got about 30%. It looks like 30% hosted number of sites there. What's the plan to sort of go to full own sites and create that total vertical position for the company?
That's a very important question. I appreciate you asking that. When you think about MARA 2 years ago, let's take the example when I joined the company. Back then, we were almost 100% asset light. We had launched UAE. That was our first site that we built overseas very successfully at a record time. It's still operating, amazing location. If you haven't been there, I'd highly encourage you to take a look at it. But besides that, when you think about growth for MARA stockholders and MARA management team back then and the board, the decision was made to grow asset light. That was quick to growth strategy, buy miners and deploy them and rented rack space. Back then, the hash price was healthy enough to do that. You could afford to do it. And it was a very nice way of coming on the map and becoming one of the largest very quickly. But we also recognized that was a strategy to growth, but we had to evolve over a period of time. Listen, owning and operating sites has its own benefits. And coming myself from a very asset-heavy industry, where you can control and you own the interconnect, you can control your destiny, you can underclock, overclock, you can maintain better, you can train personnel better. All those things you can do with an asset light. So just being very upfront and candid about that. The other thing is, as you alluded to, the cost structure can be very bloated because you're paying a third party profits to do something that you could do on your own much more efficiently and a much more cost-efficient manner and not pay them profit. So 100% agreed with you that cost structure for an asset light can be challenging, especially in an industry where every 4 years you have halving and you need to reinvent yourself and keep up with the cost structure. And Fred was upfront about that with the markets, and we have been very clear that our intention is to reduce our costs. Now, what have we done since then? A couple of things that have happened that have gone very well for our stockholders. One, we went out and bought more than 800 megawatts last year, and we paid less than 50% of the build multiple on a unit cost basis. When you think about it, if you were buying a house, you want to buy a house for your own family, the cost to build that house today is, let's say, $1 million, and you end up paying just $400,000. And by the way, this is not, coming out of bankruptcy or something. This is nice and clean house. Now you go in there on day one and start living with your family happily. On day one, you have equity of $600,000 on that house. That's exactly what MARA did. We went out and we went on a buying spree with the assets that we were operating under the asset light strategy. So the asset light strategy helped us to get into the door, know and understand those assets. And now we went out and bought those assets. And we ended up paying significantly less than the build multiple. And by the way, our competition paid 3 times more for the same electrons that we bought. So that's a great story because it helps. What does that mean? That means that we were able to buy electrons, secure our future, reduce our costs significantly, and I'll touch on that in a second. When it comes to electricity cost per coin, by paying cents to the dollar versus what our competition was paying, which means that was significantly less dilution for our stockholders when it comes to ATM. And I want to be very candid about this. This is a growth sector, ATM has been the primary source last couple of years with some converts here and there in this sector. So the shareholders are paying for the growth. And if we can get to that growth by diluting less compared to other miners, that's a win for our stockholders. And that's what we did last year. Now, fast forward that, how did that impact our stockholders? The 70% owned and operated, we exited the year last year with a 70% owned and operated capacity. That owned and operated capacity has blended power rate of 4 cents per kilowatt hour. That is one of the lowest in the large scale miner sector today, right? How does that translate into cost per coin? We disclosed that in our Q2 earnings yesterday, that it's a $34,000 per coin on an electricity cost basis on the owned and operated sites. Now, we do get criticized online, and I want to address that very upfront and point blank. People ask the question, hey, when I look at your income statement, you've got many other line items, and you are just picking electricity cost and talking about that. So let me try to address that. Electricity cost is the biggest cost item in the income statement of a typical miner. Electricity cost is something that you cannot control much because you're dependent on the grid, or if you're producing your own electricity, then you're dependent on the type curves and the curves in the market, which is market driven. Natural gas price may impact it if it's thermal driven, and many other factors in the local markets where you operate. So there are many things that you don't control there, and that is the biggest input in your P&L or income statement. So the lower you can bring that down, the better for your scale up of the operations, the more that you can squeeze out of that value from the revenue that you generate, the better your stockholders benefit from that. So that's one aspect why this industry has been so much fixated on electricity cost per coin. So ours is one of the lowest in the sector for the 70% piece that we own and operate. Then we have other costs that are maintenance and discretionary costs like R&D, which may or may not have to do anything with production of the coin, because that is, we are investing in future revenue lines that has nothing to do with day-to-day operations. So Finance 101 taught me when I was in school that you have to look at your marginal cost, right? What is your marginal cost to produce a unit, whether it's this industry or any other industry? And electricity cost comes to mind to be the most relevant cost to measure that. Now, when you combine all of that together, we also have third-party operating costs. Remember, we're paying a third party or two to operate those sites on our behalf. So we don't have an apples to apples comparison with electricity cost because they combine all the costs together and then they put a profit margin on it. So it's disingenuous to compare the third-party operated costs with operated costs. Let me step back. The 30% remainder of the capacity that we own and operate, those contracts expire in the next 2.5 years or so, depending on the contracts that you look at. So before next halving, I would expect our costs to continue to go down. And this is the only mining company, to my knowledge, at large scale who can say that their operating costs will continue to go down over time. As we had disclosed in our earnings, there's a mechanism of looking at what is your petahash per day and the cost metric and the revenue metric as well. You can view it from that standpoint too. And since last year, we have reduced our cost per petahash, which includes, by the way, the third-party miner operated sites and our operated sites, and cost of revenue and cash cost of revenue, if you like. All of that included, we've reduced it by 24% year over year. And we expect from here that as we convert these 30% third-party operated sites into MARA owned and operated sites, history tells us that we will further reduce our costs from here. And that's the exciting part, that you don't see other people can claim that they can reduce their operating costs further from here.
So you mentioned the future. Obviously, you've got the sites at the moment. I did see one reference in the 64-page earnings update to the 75 exahash, which you're planning to achieve by the end of this year. Can you give us an idea if that's going to be through adding more efficient miners to replace some of the older ones, which will obviously grow hash rate and not necessarily need the same amount of capacity, or do you envisage acquiring sites or the old terms, obviously, effective increasing hosting capacity with third-party providers to get to that target?
It's an important question to answer. We haven't publicly disclosed how we get there, and there are reasons for that because it's a small marketplace, and we don't want our competition to know exactly how we're going to get there. But the thing is that, as we had talked about in the earnings, 75 exahash remains our target. We are at 57 plus exahash already. We have paid for miners, almost all of it except for 150 million that is left for the remainder of the year. And we feel excited about getting there. The question is, how do we get there? Look, we have sites. You can do the math. Look at our existing sites that we've built the pipeline. We have 1.1 gigawatt operational today and 1.7 up to which we can grow very quickly. So we have multiple, as a sophisticated global company, we have multiple options. I would call it you're sitting on the sushi bar and you've got multiple options to try different sushis and get there. And MARA feels privileged that we have those option values where we can either expand within our existing operations, acquire more sites, or refresh fleets because we have room to refresh our fleets too. We haven't we have been very careful how we refresh our fleets, unlike some of the other competition where joules per terahash has been the most important metric for folks. Our approach has been more balanced. We want to bring in efficiencies, but not at all costs, right?
Who doesn't love sushi? That's great. Hey, moving along here, Salman, to the next question. A little bit, I guess, change of topics here. You talked about diversifying those revenue streams. There was a number of slides in your investor presentation or your earnings deck there talking about some of these key partnerships that you guys have created or forged over the last year. One of them specifically load balancing, the power technology. Can you talk to us a little bit about the growth opportunity there? And maybe how that differs from some of the other HPC AI type of strategies we've seen, obviously still related to power and data centers, but a unique flair.
Yeah, when you think about power load, the power production and the power consumption do not tie to each other. Irrespective of whatever part of the world you go to, time of the day or night, there's always a mismatch. And that's a big problem for the grids. And with the AI, so much investments happening in AI sector, and this electricity load is going to go, the demand is going to go up significantly from here, right? And while consumers still need the electricity, you have this commercial load that's coming worldwide, not just here in the US, but elsewhere as well. So how do you balance, and Bitcoin miners have done a very good job in balancing the grids. We do this across the board. It's a known secret, and that's why the local grids like us, because when Texas freeze happened last year, for example, we were there shutting down our operations, giving the electricity back. So elderly care could work, and emergency care could work, essential services could operate. And that's the part that grids love for it's that option value without them to invest more money to it. Now, you take that example and apply that to where you have an AI data center on the same interconnect, you have Bitcoin mining. And now these two data centers are operating side by side. The utility on the other side doesn't have to worry about electricity loads going up and down. With AI, that you go to ChatGPT, search something, a simple example of AI use, it suddenly spikes the electricity usage because there's a GPU or a computer that will search and do the magic behind it before it gives you the answer. While it does it, if all of us go out and search everything at the same time, it spikes the demand of electricity suddenly. Whereas when we stop doing that suddenly, the demand goes down significantly. And I'll encourage people to look at our shareholder letter. There's a study by multiple third-party renowned scholars in the subject that we've quoted in our shareholder letter that talks about this balancing of load and the mismatch between the electricity demand and supply. This is where MARA has been investing our time in inventing technologies where we take this to the next level of not just balancing the grids, but also balancing the load with AI and other industries where we can live side by side Bitcoin mining and AI and other industries, and we help balancing that load. And that software, the technology that we're building along with the partnerships helps us achieve that.
I just want to expand on one of the other partnerships that you have, and that's with 2Prime. And this one was quite interesting. I saw from the letter that Fred sent out to all the investors about the fact you started with a 500 Bitcoin investment. Now it's been raised to 2,000. Can you tell us a bit about that business model there? And I suppose the wider question is, with a company that has 50,000 Bitcoin on the balance sheet, and yes, you have allocated certain amounts to various strategies. Is this the start we're seeing now of how a company can sort of like really get a return on that HODL? Because for years, companies were building their HODL up, and there seems to be no other strategy other than to say, well, we've got the Bitcoin price such and such today, but now we're doing this. And I can just show from example, I think in the last month I've received 6 emails from companies thinking that I'm a big mining company, asking me if I want Bitcoin-backed loans, send their big Bitcoin. And it's like, there's things happening in the space now. And I'm just wondering, can you just sort of give us an understanding of that strategy and how it fits in with the whole wider perspective of what you're trying to do with the HODL altogether, please?
I'll give you an example of other commodity industries. So you look at oil, natural gas, gold. When you look at ExxonMobil, Chevron, Shell, they have sophisticated trading desks. And they are constantly looking at placing oil and natural gas pricing mechanisms so that they can squeeze the most out of the system, right? It's not necessarily just the hedging bet. In some cases, they may use that for hedging strategies, but most of the time it's, all right, I'm producing this commodity in this location. I have to deliver it in Y location. How can I get the pricing arbitrage because pricing is different in different locations? So going a little bit more in granular in that industry. Now take that example and apply that to Bitcoin. Bitcoin is electronic. It's not physical commodity. And the same Bitcoin that we produce in US, it's going to be the same Bitcoin that somebody produces in Saudi Arabia, for example, right? Just throwing out an example. There's no distinction between those two products, right? But the differentiation could be the power cost. The differentiation could be how much you can squeeze more value out of the Bitcoin that you produce. And if you hold that on your balance sheet, how can you create a revenue stream from that instead of just waiting for the price to go up? We like the waiting part. It creates value. We've seen that. But also we don't want to stop there. We want to deploy that Bitcoin for our stockholders, and that's what we're doing. Now, how did we do that? Last 2 years, we have a very sophisticated team I would argue one of the most sophisticated team in this sector when it comes to Bitcoin trading and looking at opportunities to squeeze value. And we've tested multiple markets and multiple avenues in terms of how can we enter into forward covered calls, forward contracts, options. We tried so many different variations of things. And the reason for that is because the sector does not have a very sophisticated, experienced industry where you have market participants on the other side, like the counterparties there's a counterparty risk is real in this sector, right? Because we don't have investment grade ratings like oil industry or natural gas industry can get with Moody's and S&P, Standard and Poor's. We don't have that here. So what we've done is very carefully, we've gone out and deployed certain transactions and tested waters with multiple parties, Two Prime being one of them. And we have created our own internal view around the risk that we can take, calculated risk, while expecting a decent rate of return. Now, I notice the term that I'm not marketing this. This is not. It's not the returns are not guaranteed, right? The market can go positive or it can go negative. So I don't want people to feel that we will always have a rate of return on it, but we are doing our best to the best of our ability with the options that we have available and establishing this market, which will not only benefit our stockholders, but it will also help establish the market, which helps the rest of the industry as well, whereby this Bitcoin is not a non-productive asset that's just sitting on the balance sheet and waiting for appreciation price, but it actually is generating cash flow while we're waiting for the capital appreciation to happen. And that's the crux of the thesis for our asset management team.
Yeah, that's very interesting, and we look forward to seeing that continue to develop. Now, speaking of innovation and pushing the boundaries at MARA, this was another subscriber-specific request. So your 2PIC 1000 or two-phase immersion cooling, I like the acronym there. Can we get an update on how that's going, what you guys are doing in that space, and any potential orders, revenue, numbers you can share?
Yeah, look, this is a question that we get a lot, and I wanna be candid about that. This is MARA is primarily a Bitcoin miner. We have integrated technologies like mining pool. We are the only ones who, at a large scale, operate our own mining pool and are a miner as well, and at least in the U.S. to my knowledge. And then we have our own firmware, and we have gone out and announced some interesting extension of technologies in layer 2, for example, that has benefited the industry and long term we believe will benefit all of us, including our stockholders. And then on top of that, we did not stop there because cooling is an interesting avenue for not only Bitcoin mining, but also AI and HPC space. And those computers, they need to be cooled down. And in simple terms, you need technology, better technologies to cool as compute becomes more dense and more difficult to operate in difficult climates. So that's the backdrop. Now, we have tested in our labs the 2PIC, and we've talked about that. And as a technology company evolution, as you can think about, typical Silicon Valley tradition where you go out and invent something, you deploy that, you learn from it, you get feedback from it. Some of it is encouraging, some of it may not be, and you go back to the drawing board and reincorporate that, and then you start selling at a scale. So this year, we had announced earlier this year that we've deployed it with an external party, and we are gathering data, and that work is in progress, and we're getting feedback, and we're incorporating that, and there will be more updates later this year, and with the expectation that this cooling technology evolution, as it happens, we have some knowledge about it, and we are ready to tap that market at the right time and with the right opportunity.
Yeah, thank you, Salman. We're getting closer to the end of the session, Salman. I've got a question on HPC and a couple of investor questions to follow. But I suppose the question that I want to ask now is really, of all the Bitcoin miners out there, there's yourselves and CleanSpark are literally staying true to Bitcoin mining, where the rest seem to have diverted their additional power towards high performance compute. Some we've seen through the contracts, which, to be honest with you, have been fairly transparent. I mean, if I got contracts like that, I'd be plastering them all over social media as well, because there were some really good contracts. What has kept you focused on Bitcoin mining, and not cast your eye. Having significant power sites yourselves now, you talked about a 1.7 gigawatt of pipeline. Is it something that the team at MARA have sort of like discussed, looked at, and then felt, what, we're happy the way we're going. Let's, let them go their own direction. What's turned you away from HPC itself?
Look, technology is part of MARA's DNA. We are primarily a technology company. Yes, we happen to be in the energy arbitrage space, if you like, because we take advantage or design technologies that helps consume the best use of electricity use. But at the end of the day, Bitcoin mining, whether it's Bitcoin or traditional data centers in AI HPC space, both are in the technology sector. When it comes to the miners going into the AI HPC space, some of them were better designed to go in that direction, and they took advantage of it. We looked at it from our perspective. We were an asset-light company previously, and we were transitioning into asset-heavy. And we know what we're good at. When you look at the AI HPC structure, you're reliant on one big customer. And we've seen lately since then our concerns becoming true, where if Microsoft or Amazon or anybody else, they want to walk away from a contract, they can, right? So it's a different business model altogether. Bitcoin miners don't have a customer. We're not used to serving a customer. AI HPC, in that case, you have one big customer who can dictate terms. And we felt that was not the best use of our resources at that point in time. Then you need water, you need high-speed internet, you need to be close to civilization, and some of that may or may not make sense in some cases, right? So lot of deliberation, and we decided that this was the best use of our resources to continue to be in Bitcoin mining space. Now, we are not opposed to AI. AI is important, and as we have alluded to in Fred's prepared remarks and some Q&A that I'll encourage all the stockholders to go and revisit that. There are lots of nuggets in there. And I would say just stay tuned. There's an MARA AI version that we have been exploring. And one of that is the balancing the grid, for example, balancing electricity load. And we view as a service provider to that sector is a better way of addressing it, but which includes the cooling technology, which includes software, which includes the balancing the grid, and those are the things that we believe will create a better value for us and our expertise in our data centers than converting into a traditional AI HPC site.
Just following on from that, then, if you're staying in the Bitcoin mining space, and yes, there may be some new strategies going forward, but predominantly Bitcoin mining, do you see a longevity in Bitcoin mining? We've already had one CEO of one of the largest miners come on the space and say he believes there's another 2 or 3 years left because we've got a halving coming up in April 2028. And we saw what happened at the last halving. You've got a difficulty that happens every 2 weeks that really is like another halving to miners. If you go back to your sort of operational updates maybe 18 months ago, see what you're delivering then in terms of Bitcoin per hash rate, and look at what you're delivering now, even with 57 exahash, and it's miles apart. So this only gets worse as we get close to that halving. Are you still thinking it's a long-term, and it's just a brief answer really, this isn't, a long-term expectation, or do you think we've got maybe a couple of cycles left? This is from the public miners, not from every miner out there.
And this is where Bitcoin miners who have large HODL position will differentiate themselves, because although halving is reducing the production, but if you hold the Bitcoin, Bitcoin price goes up. So that's the thesis of our HODL, right? That's how it started. But when it comes to halvings, look, this is a very unique concept. You don't see this concept in other industries. And it's a little bit difficult to comprehend that after every halving, you will continue to evolve and continue to see the price go up. And so as fiduciaries, we have to prepare for that. We have to prepare for the worst. And that's why when we announced vertical integration, we didn't stop there. we actually went out and bought wind farm in Texas. And that wind farm about 114, 120 megawatts or so. Why are we buying wind farms? We are not an electricity company. We don't want to be a utility company. We don't want to be selling you electricity. There are better people who can do that than us, and we don't want to be in that business. We are primarily a data center company and a technology company who happens to take advantage of electricity opportunities in the market. And we win these. So when wind blows, the electricity cost or marginal electricity cost to produce that electron is very low. I would say close to zero. I can't say zero, but because it's not zero, but it's very low. And when you look at the example of traditional data centers today, large scale traditional mining data centers in US, that costs about, let's say, $100, right? I'm just making up a simple example for your listeners to understand. If we were to go out and do a MARA site like we did at the Texas wind farm, and we just consume electricity when wind blows, and then we stop producing because it's the most best use of our resource, and we put old miners that are almost fully depreciated or fully depreciated, older technology. Now we don't care about the technology efficiency at that point in time because your cost to mine is almost zero. We don't have to dilute stockholders to buy more miners. We are extending the life of assets that our stockholders already own. So think about it. You own a car, you keep on changing every 2 years. You keep on leasing, changing every 2 years. How much is it going to cost you versus you owning that car for 10 years until the wheels fall apart? Conventional wisdom tells us that that's a better use of your money. And that's what we're trying to do. So we're trying to instill that financial discipline that you would try to have in your own personal life at a company level, which means that the same site now has assets that are fully depreciated and they're producing at almost zero cost or low cost that are 85, let's say 70 to 80%, 85% lower all-in cash cost compared to a traditional data center that currently operates in the United States. Imagine what that would do for you. So that extends your life beyond one halving or so. And look, the industry has to go beyond the traditional data center mining or longer duration of time, whereby Bitcoin mining becomes a part of something else. Like we are talking about AI data load, it's married with Bitcoin mining on the same interconnect. That is a classic example of where Bitcoin mining continues to exist and creates value because the cost to operate that is either zero or we're getting paid to balance the grid.
Absolutely. That's a good response, and thank you for that. Last two questions are from the retail investors again. The first one is relating to the fact there's been quite a few Form 4s appearing through your SEC documents for selling from some of the senior team at MARA. Should retail be worried about or concerned about selling? We see some of the mining CEOs have been buying shares in recent weeks, and they're stock going the other way for doing this. Is there a concern to that, or is it just a case of planning sales in advance, etc.?
Yeah, when you look at the Form 4s and the details around it, it's something called 10b5 plan, which the SEC rules allow executives to manage their portfolio of assets under certain circumstances, and that's the 10b5 plan execution that happens for some of the executives, and it's in line with the financial advice that the executives are getting and balancing their portfolio based on what they own. Now, having said that, we have significant skin in the game. Like when you look at the holdings that our key executives hold or the named executives hold, it's something that is important from our stockholders' perspective that we own a significant portion and have the skin in the game. And our board has mandated, just like any other board, public company board, certain level of ownership interest in the company. And we have compliance and rules that we follow according to which that has to be maintained.
And the final question is probably on one of the sort of like biggest criticisms across all mining companies at the moment, especially the larger ones. The industry's, around the rising executive compensation. How does MARA determine these award levels, given the fact that Bitcoin mining is an unpredictable business model, as we don't know the price of Bitcoin is going to be tomorrow, next month, next year, post the halving in 2028. So how do you go about sort of the process of putting it together, and just explain what, these numbers that we see there, are they the real numbers, or are they planned numbers in terms of delivery of compensation?
So executive compensation is, as a public company, look, we have independent board members. And I can talk about MARA. I can talk on behalf of the industry. Every company is unique in circumstances. In our case, we have a completely independent board of directors. Our compensation committee, or talent and compensation committee, as we call it, is completely independent from the management team. It's an evolutionary process, right? We were a startup just a few years ago. Our management team is a hired management team, so the philosophy is that the management team has to have skin in the game, and enough so that stockholders feel comfortable that our decisions are being made in line with the stockholders' interest. There's that race towards bringing everybody there when it comes to this sector. Now I'm talking about the industry. And then from our company's perspective, look, we have external independent advisors that our compensation committee hired 2 years ago. We have gone through an evolution of looking at the structures, the challenge, as you alluded to. It's a newer sector. The traditional metrics become a little bit challenging, especially in a growth sector. But also at the same time, there are things that we've incorporated over a period of time. For example, when you look at our 2025 compensation plan, it is driven by Russell 2000 as one of the index that we tie our performance to. So and it's a 2-year requisite period, a portion of it, and that's pretty standard in a public company of our size, right? But then there are other metrics like hash rate hours and the electrons that we control and grow over a period of time, which is important, which directly impacts our stockholders. So those are the things that are important from a stockholder perspective. And the company has gone through an evolution of this process of just the stock price historically versus peers, to having a more all of the above encompassing metric that you would expect to see in a public company. And I would encourage people to review our proxy statement, which goes in depth into the compensation philosophy and how the compensation committee has structured this to see how the alignment exists between the stockholder value creation and also the wealth creation for not only stockholders, but also management team at the same time.
Sure. And I appreciate the transparency on that one, Salman. I wanted to get those asked again for the subscribers. So thank you so much. I know we're a couple minutes over the hour. We really appreciate your time. Congratulations on the record-setting Q2. I'll hand it back to you to close out here, but honor having you on the program.
Look, it's been fascinating to talk to you guys. Always a pleasure talking. And this is MARA has been one of the largest players in the sector, and we've been one of the most innovative technology company. When we think about technology, we have been at the forefront of innovating things, and we expect to continue to do that. We appreciate the following that we have from the retail base and also the institutional base. And we look forward to creating value as we go along from here. And there's a lot of exciting things in the pipeline. There are things that we can talk about today, and there are things that we can't. But all I can say is that I feel that I'm on my toes all the time and trying to create the most value as we can from a corporate perspective. And I look forward to talking to you guys again.
Great to have you on the show. Retail shareholders should at least read the letter that Fred sent out to everybody. It's got a lot of information in there. I certainly put the numbers are certainly improving the right direction, because, with a lot of miners, the last few quarters have been challenging. We're hoping to see these green shoots, and we have seen these green shoots today. So thank you for coming on the show and giving some more colour to those green shoots and expressing some of the strategies that you're likely to be going down over the next year or so. So thank you very much, Salman.
There you have it, folks. An hour deep dive into MARA Holdings. Let us know your thoughts in the comment section below. Hit the like button. Feel free to subscribe. We'll see you back here tomorrow.